Good afternoon. I'm Lisa Padmore, Chief Executive Officer of the Institute of Chartered Accountants of Barbados, or ICAB. Welcome to another episode of Talking Business with ICAB. If you tuned into our episode last week, you would have heard that ICAB hosted our annual tax update at the Lloyd Erskine Sandiford Centre. Today, I want to briefly explain an important change that affects companies operating in Barbados that was addressed by the Barbados Revenue Authority, or BRA, and that is the repeal of the Economic Substance Act. We're going to discuss what this means for filing requirements in the future. I'll keep this simple and non-technical, so even if you're not an accountant, you'll walk away understanding the essentials. So what is economic substance? Economic substance simply means that a company must show it has real activity happening in the country, not just a name on paper. This includes having employees, expenses, decision-making, and genuine work taking place in Barbados. In other words, the business should have an actual presence and contribute to the local economy rather than just operating only for tax benefits. So why did Barbados introduce economic substance in 2019? Barbados introduced the Economic Substance Act in 2019 in response to international tax standards set by the Organization for Economic Cooperation and Development, or as is commonly referred to, the OECD, and the European Union. These global bodies wanted to ensure that companies benefiting from low tax or preferential regimes were carrying out real economic activity. Barbados, like many international financial centers, implemented the law to maintain its reputation, avoid being blacklisted, and meet global transparency and fairness requirements. So what's changed? In November 2025, Barbados passed the Companies Economic Substance Repeal Act 2025. This removes the original 2019 Act because Barbados has now been internationally reclassified as a taxing jurisdiction with preferential regimes, rather than a no or nominal tax jurisdiction. As a result, the old standalone Economic Substance Act was no longer required. What does that mean for companies? Well, economic substance requirements still exist. They have not gone away. Instead, they're now built directly into the income tax system through the Income Tax Amendment Act 2025. Going forward, these requirements will be administered by the BRA. And what about older filing periods? Well, for economic income years up to December 31st, 2024, the old economic substance framework still applies. Those filings are still enforced by the International Business Unit, a department of the Ministry of Energy and Business. From the 2025 income year onward, all requirements move to the BRA. Who needs to file economic substance information? Economic substance still applies to relevant entities engaged in relevant activities, such as insurance, shipping, and intellectual property business. There are exemptions for companies that earn no income from a relevant activity, are taxed at a rate of 9% or more, or fall into special categories such as trusts and partnerships. And what will filing look like going forward? Well, starting with the 2025 corporation income tax return, companies will upload economic substance information with their corporation income tax return. This includes details such as business activities, income, expenses, physical presence in Barbados, staff, board meetings, and the core activities performed locally. Supporting documents must also be included on filing. So what are the consequences of non-compliance? Well, if a company does not meet economic substance requirements, the BRA may adjust the company's tax obligation and impose a rate of 9% on the relevant income. Thank you for listening. I'm Lisa Padmore, and this has been another episode of Talking Business with ICAB.